So tell us about this Fab Five and what these stock movements signify.
Sure thing. Let me just start by pointing out that that chart is of yesterday. Today, the new number is about 100 billion.
Wow.
100 billion lost across the entire five. So almost twice what we had yesterday.
Yeah.
Exactly. It's about the same losses we had yesterday. So we continue to see those same names that got hit 2-3%, 3 to 5% again today. And I think if you think about, why is this happening? If you look at the suite of companies, Facebook, Amazon, Google, Netflix, I mean, there's really one thing they have in common. It's, as you point out, they've been the big winners. So it's hard to really pin some sort of fundamental shift in sentiment or anything beyond really kind of people need to get money out, and there's liquidity in these stocks. If these stocks have been up, Netflix 100% leading the S&P this year, huge winner. If you need to tap into that, Amazon around 60-70%, that's where you're going to get some cash that you can put to work and try and tourniquet some of the bleeding elsewhere. If you look at some of the names are specific, but I think that's generally the big picture.
So do we know what the trigger really, is? Is it just, China and the devaluation last week? I mean, what is it?
Well, that's the thing, is that for some of these companies, you can see that, this has been going on for a little bit. Obviously, Apple now is down more than 15% negative on the year today if it closes where it's at. So certainly there's a very Apple-specific story there for whatever reason. Some of these other names, though, they all are just kind of reflecting a sort of risk-off move that we've seen in the past couple days here. As far as the broader sell-off goes, it definitely seems like that's been related to a lot of the growth concerns. And if you look back at what happened in October, similar type of thing.
Hey, Mike, I thought that people don't buy stocks anymore, right? I mean, we keep talking about exchange-traded funds, baskets, passive investing. But even if they are passive investments, when those indexes decline, it takes these stocks with them.
Well, right. And passive can mean a lot more than just buying the S&P 500. What Oliver's talking about, this momentum trade has become very popular. So there's ETFs tracking that. There's a lot of, sort of computerized trading funds that track these things. And really, the idea is just buy the winners, short the losers, and it works until it doesn't. And all of a sudden, the momentum can just be sucked out of the market like this,
right,
like we're seeing.
So then does that mean that this is the sign of a bear market then?
I wouldn't go that far and ring that bell. I mean, it could be. I don't know. But the important thing to realize is dips like this are common. We're down about 6% from the record on the S&P 500. Dow's down even worse, about 8 or 9% the last time I checked. And it feels, like the end of the world, and it makes everyone sort of start focusing on all the negatives out there. But if you look at last year and the year before, there's been a rhythm of these dips like that people have bought routinely. Will they buy this one is sort of an open question.
Right,
because
but we haven't had, though, a 10% dip, right? Am I right about this? For 3 years, though, right? So this isn't like what we've seen.
Well, we're still not at 10% yet. We're about six and change now.
And to be fair, it's 10% if you're talking about the overall market. If you happen to be specifically invested in energy companies, you've already been in a bear market, and you're already crying.
You're crying in your soup.
Right, exactly. So Oliver, I'm wondering, when you take a look at, the stocks, these fab. Any operational issues? Because if you've been waiting to get in, right, everyone always says, oh, yeah, I'll buy it, but I'm not going to buy it until it gets less expensive. Any operational issues with any of these specific companies?
Well, I think you do bring up a good point, is that, there are people waiting to get into some of these names. Obviously, Apple's a pretty expensive stock. Obviously, some of these, all of them really are the household names, and that's kind of why you get this sort of fear of the reaction, because everybody knows Facebook, they know Netflix and Amazon. But it does create some of that opportunity where somebody says, okay, at a certain point, this becomes a little bit more highly valued. And you also have to remember, you have the companies themselves as well, pushing the buybacks as well. Now, companies aren't always the best timers of when they buy their own shares, but that should actually be encouraging in some sense, because even though these valuations are still, at a decent level to somewhat high, companies are still buying them back up. So you have that as well.